Welcome back. Welcome back. Market Stalking with Deeyana. And of course, Coach Robert. Deeyana, how are you today?
I'm all right. I've just come away from my own live stream, so we're hoping to continue some of the narrative in gold that we've seen. So yeah, let's see what we've got.
What
Let's
was the
chat
what was the
gold.
main conversation?
The main well, there's always a lot of conversation because it's 90 minutes, right? But yeah, we were talking about risk-off events, and we were also talking about combines. We were talking about Topstep. We were talking about a whole bunch of stuff. And yeah, so everybody agreed that Topstep is cool. Everybody wants to jump on it. They're like, are they live? Are they live? And I'm like, they're no public yet. so,
Soon.
yeah,
Yeah, we'll be doing this soon. But
yeah,
we want to make sure
there's
it's
a lot
right.
of interest. Yeah, absolutely. That's
Right.
what I said. I said it's still beta testing, beta testing, however you want to call it. So yeah, I think there's a lot of interest about the lockout button. And somebody even said it made him into a completely different trader. So that was very interesting to hear. And I'm not surprised because it's something that traders
Yeah.
need. We sometimes need to be saved from ourselves. And that's one good way to do it.
I did that yesterday
Yeah.
on both accounts. And it was early.
Nice.
Markets ran in my favor afterwards, but you know what? I did not get upset about it. I wasn't worried about it. Didn't have the FOMO. My decision was made. I committed to closing the accounts, shutting them down, locking them up, and I was happy with the outcome.
Yeah.
The woulda, coulda, shoulda was never there.
It was a tough day. Like one thing that I'm doing this week because of all the stuff that we have from the Middle East, I'm telling everybody to be really careful. And if they want to keep trading, just go to micros. Just go to micros. You can
Or
stay
practice
out,
account.
but today yeah, practice account is one way to do it. I didn't want to stay out of the market completely, so I am down to a couple of micros or 3 micros, depends on the opportunity. I'm running a long gold at the moment from 23.98.8. Again, very small, and I've increased my stop loss size as a disaster stop just to desensitize the position to the craziness that we've seen. I mean, gold is like, what, over 350 ticks for the session. That's a big range. So obviously I don't want to, plow in with a full size and then just get smacked in the face for like $500 in like the space of 3 seconds. So obviously I'm just controlling my risk that way. I'm still very long biased on gold. I still think there's room to keep going higher. So we do have, let me have a look at what's going on with equities, because during the times of risk on or risk off, you want to look at a few core markets across the board, and that will give you an idea of what is going on. Yesterday, we had a typical risk-off day where equities were smashing down, gold was screaming up. So if you manage to recognize that on time, you shouldn't fight those moves because they are so relentless. But it obviously takes a while to live through those events before you can start recognizing them. And they don't come every day. They're fairly rare. So it's just time spent through irregular events, black swan type moves. So that's kind of what saved me yesterday. So I did come away. I think it was about 400 in profit or something, which was still fine. It was pretty good. Again, traded very small.
Deeyana,
Managed to, yep.
you mentioned black swan moves. What
Yeah.
is a black swan move?
Well, it's not a bird, that's for sure. So it's basically an event that nobody can expect, that comes out of nowhere, and that has a massive impact on the market. Type of black swan events was the credit crunch of 08, COVID lockdowns. So basically anything that causes an uproar across the board. It's something that is extremely challenging to trade because it always comes with extraordinary volatility. But as the old saying goes, in chaos, there's opportunity. You just need to know where to look, right? And one thing to look is to size down, to make sure you desensitize your positions by sizing down, maybe increasing stop loss sizes. Revisit your stop loss size. Like, for example, I usually use about like 30 to 35 ticks on gold. I can't use that now because, that's like a tenth of the move that we're seeing. That's too small. That's not going to last 3 seconds. So obviously you need something that's going to give you time to react to whatever is coming. And trading from a position of fear and doubt is never what you want to be doing. You want to
No.
trade without the fear, and you want to follow your plan. So I have a pretty good way to sift out whether I should be trading with full size or size down. And then I also have a way to scale my stop losses. But, all of that comes with experience and obviously living through some of those events and also messing it up with some of them, especially early on in my career. It teaches you a lot. It's that experiential data that nobody can really teach you. You can only live through them yourself and see how they feel. And then
Right.
realize, oh God, I need a different approach for this. And since then, every time we have these sort of moves, I just size down and I allow the position to breathe within reason, obviously. So it's almost like running swing trades intraday, because those are the kind of sizes of stops that I tend to use in these situations. And it's enabled me to stay pretty calm and to make perfectly rational decisions on the day. So
Real
now we're
quick
post
here, we've got
settlement. It's still
NASDAQ.
moving.
Yeah, NASDAQ here.
Yeah.
Buyers strong here. We're watching gold also.
Hmm.
NASDAQ up to 17,941.75, top and a high here. 45 is the high. See if we can get to it. Gold right now trading 2407. Also the ES running here. Nice run here on the bull here, 5113. High of the day, 5120. And of course, crude also moving north, 85.43, still at the high of 85.73. It's an update here on our markets. And Deeyana, you mentioned a word, desensitizing. Um,
Yeah.
it's the thing is, when I was taught on the floor, obviously when the market was open, tragedy had hit a lot of places on the planet. And the thing is, as a trader, our job is to trade. And no matter how bad or how good the news is, our job is to trade. Whoever
That's
gives
true.
the market a good move, a bad move, and that word desensitizing was taught to me on the trading floor. Something.
Hmm.
Gosh, 9/11 happened. I mean that was horrendous.
It was
But the
awful.
thing
Yeah.
was that there were still people looking to trade, and I finally
Trade.
realized that. That your job, if you are and you consider yourself a trader, you need to trade and take it. It sounds nasty, but it take advantage of the market movements.
Yeah. If the building that you're trading from is not falling, you trade. That's, the core thing
There you
that we
go.
do. And it's maybe not something that everybody agrees with, but that's what we're here to do. We're here to collate and aggregate the data that's coming out of such bad news, and then to try and profit from it. That's maybe a slightly uglier side of being a trader, profiting from, bad events, but we also profit from good events, So
Right.
when things
Right. Oh,
start
exactly.
moving in the right direction, we have lovely, trending markets that we can take advantage of as well. So it works both ways. But yeah,
Right.
desensitizing the position, it just simply means not being smacked in the face with the normal position that you would trade with, and then going, what the hell happened? So you need to stand back and reassess how you're going to approach any trades that you take in this
Mhm.
environment. I know some people just
Yes.
completely stay out. I still like to be involved for the purposes of experience. And I have lived through a few of these events before. So I kind of know how I can approach them, if that makes sense. But desensitizing the position via lowering your size, widening your stop to give yourself time to react in light of new increased volatility, that's what desensitization means.
Right.
And it's going to
Right.
save your butt so much, like going forward.
Yes. Cover your butt. Speaking of covering,
Cover your butt.
buyers are covering here nicely here. NASDAQ new high 17. What do we got here? 81 half. Also in the S&P, the little sister following along very closely. We did hit the 51.20s. We did hit the 51 quarters. 51 halves is the high, and still lingering around there. Also, gold still making a push here, and I'm going to
Yeah.
kick crude a little bit and see if we can get back into the game here.
Hmm.
Robert, what are you doing over there? Anything
Oh, I was
cooking on
waiting.
your end of the spectrum.
Yeah. Well, when you're on and talking and you're taking group coaching and then your setup comes through, and then you switch over to when you trade and the setup has already gone by, there's not too much you can do. But I'm sorry I wasn't able to jump onto this one ahead of time. But those are the breaks. There will be another bus around the corner, as we always say.
Yes.
I did write up the plan for this micro challenge that I will be delivering to everybody. I'm not going to go through the whole thing here, just a screenshot of what I wrote in here. This is the steps to it. This is the process I'm doing, and this is the strategy with some charts and some screenshots. I'll be getting that out to everybody that wants to follow along, because I'm going to try to stick to the rules.
For those that are wondering what Robert
Yeah.
just put there, he is trying to pass a combine, correct? 50K combine with the micros, exclusive, trading only micros. So what is your progress? What's your P&L on the account?
Well, the P&L is down a little bit to start with. And before I go there, I'm not only passing with micros, I'm passing with micros as if I were trading an XFA, meaning no more than 2 because of the scaling plan. Okay. And then I'm targeting for, I want to make sure they get 5 days of over $200 so I can work towards a payout. What I'm doing is I'm preparing myself for when I become funded, instead of throwing a bunch of stuff at the market and then needing to change my strategy to a different area, once I get in there. So that's the whole approach. The P&L right now is down a bit, and the reason it's down a bit, honestly, is because the first few days I tried trading this, I didn't do it right. I was trading it as if like I already knew how to trade my other way, by trading, short-term trades using a couple of minis. It just didn't work out. It's just not the way. I have to redo my whole strategy, my whole way of thinking around this. And this is entirely what this challenge is all about. It's not just a challenge to prove this, prove to myself also, and say, what do I need to do to make a change? I'm trading instruments that I don't typically trade at times. I typically don't trade them with parameters I don't usually use on a chart that I don't have. And it's a full-blown challenge to myself. I didn't do good the first couple of days. I was trading it incorrectly. I took a look over the weekend, put a plan together, and that's what you saw, and that's what I'll be giving out to everybody. And then a little bit Friday, Monday was good. Today I'm down slightly. I'm down $62, and that was for this section right here, right around 11:30 or so today. You can see the 12:30 trade I had right down at the bottom. That was right in this area, but it just wasn't the opportunity. All I'm doing is very, very, very simple. I'm just waiting for a couple of blocks, these Renko bricks, to stick together. They're 10 points high. So when the market is ranging 20 points back and forth, I'm just going to take a break above or a break below and wait for the next reversal to get out of my trade and, of course, manage my stop. So that's really it. It's nothing. It's not rocket science, and it's going to force me to slow down. It's going to force me to hold on to my trades, and it's going to force me to pick my spots articulately and following a plan. And that is your challenge.
Yeah, I do remember there was a day when we were like, Robert, how are you doing? And you're like,
oh my God, that's right. You were there. Like, I'm dying. This is killing me.
What's up? Breathe.
That's when I did it, Deanna. I think you were there, and that's when I just had to this is not going to work this way. It's just simply it's not the correct way to trade this environment with this setup and this strategy. It just wasn't right, and it proved itself not right. It was down a couple $100 on day between the first day and the second day. I think it was like 180, and then like another 80. I'm like, this is not working. So I spent the weekend going over, putting a plan together, and we did okay the other day, and we just took this first loss right here. But hey, you know what? A second loss, excuse me. And that's it. We'll once it starts ranging, and it's opportunity too, folks. We're running production here. We can't just look at these all the time. We kind of keep it off on a screen and say, oh, what is that looking like over there? Can I jump in there and then let it go? That's what we have to do behind the scenes. And sometimes you miss the moves, but you know what? There'll be another one coming around. There's no sweat on this. It's a simple challenge. And hopefully some folks will follow along, and everybody can possibly learn something, including myself. I learned something on day 1 and then again on day 2. So it's a constant battle and a constant growth pattern we're in here. So it's a challenge. We'll see how we do.
I would say it's a typical Kolb's experiential learning cycle. So you have the abstract theory, then you test it, do some trades, then you go back to review, you improve, and you come back stronger. And you keep doing that.
Exactly.
And keep doing that. I wish that there was like a comment on one of the videos. Actually, for Power Hour, you guys posted it, and somebody asked, "Oh, how long did it take you to?" And honestly, I wish that somebody told me about the reviewing part, in the first like 2 years of starting to trade, because I didn't really know about it until I got to the prop world, which is already like 5-6 years into my career. Because I did pretty well as a swing trader, and then I was like kind of fish out of water wanting to do intraday trading. And there's a guy next to me doing like an options trade for like $500,000, and my entire pot at that time was probably about £220,000, which I thought was amazing. But then there's this guy next to me who's like doing much bigger, and I was like, oh, what have I gotten myself into? And then he was actually somebody who talked to me about improving and you're reviewing your trades, and I was like, I've never done that. It's a great idea.
There you go.
So I started doing that as well. And the amount of progress that I saw, literally like within a week, it was crazy. Like you suddenly become aware of the stupid things that you're doing that are really hindering your performance, and they're just there. And you're like, why do I keep doing that? Like, there was this thing where I kept trading the open, and most of my losses were at the open. So I'm like, why am I trading the open? Like, I should just stop. It's so revealing.
How did you remind yourself the things not to do?
How did I remind myself? Well, Post-it notes. I have so many Post-it notes, yeah, but also flow diagrams. So whenever I was working with a new process, if I'm trying to remember what I'm supposed to do, even when the trade is open, I would do like a little execution flow. So it's like, this happened, then if we reach this level, I do this. And just visualizing that on a flow diagram, that was really helpful for me. I'm a very, very visual person. So trying to keep it all in my head, it didn't work for me, but just laying it all out. And I mean, even now, if I show you some of these, they're like, profile open, that's my open sentiment, my levels, then I've got some price action, this, check this. It's literally just reminding me what to keep track of once I'm already in a trade. So Post-it notes, guys, go get some.
You can't go wrong with that, because it's a constant reminder in front of you constantly. I've got Post-it notes here on reminders throughout the day. I would highly suggest that. It's only going to help you. It's only going to remind you when you're in a trade and you're stressed out and you're wondering, oh my God, what do I need to do? And you see the Post-it note that says, do not revenge trade. All right, that's a good reminder, because I would have forgot about that. I was going to put a position on right now. So
I also have
CYA.
alarms on my phone. So that's another thing, because with the way crude oil in particular trades, there's certain times of day when certain price events are pretty high probability, like reversals intraday and all of that. And a lot of the times when I was still a new prop trader, I would be staying in a trade past those times, even though my review said that I need to bail at that time. So I started doing alarms. So now I actually still have them on my computer. So they just pop up and they go, hey, bail. But I mean, at this point, a lot of the times that's quite ingrained in me. So I already know it's coming. I'm not like sitting there going, oh my God, now what? So alarms, Post-it notes, like anything that you can remind yourself and to tell yourself, this is what the review said, this is what the data says, follow it now. You can even do alerts that come to your phone directly. So you receive a text message and you go, oh, who likes me? And then you're like, it's an alert from the trading platform. Okay. Fun.
Who likes me?
Hey,
just
guys,
over the chat, thank you, Johnny Hoagland. Real quick here, NASDAQ Delta plus 4,600. NQ Delta plus 4,600. Thank you, Hoag. Robert, you were saying.
Yeah, I saw that Delta come over. The good thing you jumped on there, Eddie. I was going to do the same thing. I'm going to switch the charts exactly the same. I'm just going to switch over to practice accounts. We can put a trade on for those that want to see these types of bars moving around. That way, it's not going to make any difference to the process I'm doing. We have a Delta. We see this coming down. The market's coming down, 17,870. What if we want to buy this area, buy this low? We think that it's come down far enough, and we'll have our risk on here. So we'll let it go down a little bit further until we get to the low. I need to watch my real chart so I can see what's going on. And then we'll take a long, and we can just see how this happens and see if we can get the bounce back up again.
Real quick, Robert. Gosh. What a different side of the coin here. We got the NASDAQ selling off here big, S&P selling off. Looks like gold's going to join the party. And crude is saying, hey, wait for me. Pushing all the way here. S&P's down to 50, 83 half. We're looking at a low of 78.75. And right now here, the NASDAQ here, 17,855 quarter. Low of the day, 17,818. And gosh, I tell you, it's a roller coaster here right now this afternoon. Back to you, Robert.
Yeah, big difference from earlier today where we were just chopping there on the NQ versus within less than 100 points or 100-ish point range all day long. Now we're back down to yesterday's low, April 15th low, roughly. We have the overnight low below that at 17,800. What do we say we take a long here for the bounce? This is a practice account, so we have nothing to fear, and we'll move this off to the side. We will watch what happens. And we'll see if we can ride this back up to the highs again. If not, we go down, we get stopped out. I'm going to reduce my risk just a little bit more. So, and we'll just watch and we'll see what happens. We're up $22. Let's just let it ride up, see what happens. We can watch this thing work as we're going back and forth.
Yeah, there's a neutral day. There's a bit of a bit of danger of risk off kicking in at any one point. This is why I'm not really that keen to short gold, because risk off means equities selling off, gold and crude oil usually going up. And that happened really late yesterday, comparatively. We should have ended the session with like a nice auction fade, and it should have just died. Instead, gold went into this like massive uptrend. So again, I was partly expecting that to happen because of all the news that we had over the weekend. So that's the only thing to just keep in mind in case we get some late news coming out of the Middle East. Everything is really sensitive to headlines at this point.
Dee, you got a position on?
Yeah, I've got a long gold from 23.98.8. So 23.98.8.
Long gold, 23. All right, it's trading to 403s right now. And Robert, what's your position and contract size?
Yep, absolutely. I'm in one contract. It's a practice account. It's one contract MNQ, and the entry price is 17,858 quarter.
Okay. See if we can get those posts up here on the screen. Let our traders know where we are in gold and mini NQ. Now, Robert, what's the difference here? Is there much of a difference? I know a lot of us trade NQ with the minis. Is it just time-wise, volume-wise? I mean, do we see a lot of action here in the minis versus the micros?
They're very similar products. They are a different product, so there's going to be a slight difference between the two of them. You may be a tick or two off. I've seen it if there's a lot of slippage going on there, a lot of market movement. They are different products. Just be clear on that one. So
how different?
And it's a 10-to-1. It's a 10-to-1. So the NQ is $20 per point or handle. Yep. And the MNQ is $2. I'm going up. It's going to my favor. I'm going to punch in one more. We're going to go 2 micros long. It makes me average 17,866. And we're going to run this up. I'm actually going to bring my target down. We are getting right now. So hey, we'll see if it works or it doesn't. I just want to share what these Renkos look like for traders who don't want to use their own money or risk their own account. You can just see how they go. They're just going to plot every time the market moves 10 points. If it takes an hour, we'll have one block if it only moves 10 points. If it takes a few seconds, we'll have a couple in a row. To me, price wins over time. It's just a matter of how traders like to trade. If neither one of those matters if you're trading a DOM, like we don't look at candles, right? If you're trading a DOM, we don't look at time. If you're trading a DOM, it's just the different way of looking at it. And I always like to expand and I like to share as I'm going along with things. So that's all we're doing.
So if you're trading, you're just trading the DOM? Because what I like to do is I like to watch momentum on both. I like to see, the DOM is like a tug of war. Who's winning it? Back and forth, and all of a sudden one side pulls up a little ahead, and now you're seeing some market movement. But just looking at the charts themselves, it's sort of, what it does is it tells me a story. And if you're looking to see what this story is about, You look at the big picture. Move out. I got a 15-minute every day. I will do a daily or weekly, a daily, hourly, and then I set my 15-minute as my destination, just so I get a look to
Hmm.
see what happened prior, any levels that we hit. What did we do when we hit those levels before? Not to say that's going to happen again, but it's good to give you an idea where the traders are. So that's something that I like to use both. And you just
Hmm.
trade off the dome, huh?
If I look at the dome, and I'm gonna switch to a screen real quick to show you, but I want to also update. I closed those positions. It popped up. It got over $100 for those two positions. I simply flattened my position at that point, closed them all out. That's it ended up being like $112. I was down a little bit, so my P&L right now is $80. But folks, this is
Okay.
exactly what I'm trying to do with this. That was two micros right here live. The market came down to a level, hovered around the April 15th low. I went long, had a stop in place, went my direction. I threw my second contract on. I closed out for $100 and some odd dollars profit. You do that twice, you can take a payout. So I'm not trying to prove like easiness. I'm just saying how simple we can keep it. Nothing else is on here. There's no indicators, no nothing. We literally just said, hey, is that the lower it was before? Let's see if we can take it long. Went in my favor, took the money out, and closed the trade. Now, Eddie, here's your DOM. I already have it set up. DOM only. I
Okay.
set a layout, and this is what they all look like. That's just 6 DOMs in a row with the main products that we trade. So some traders can trade only off DOMs. I cannot do this, but that's what it would look like.
Yeah.
So
What do
there's
you use?
somebody
You use the dome?
saying I use a combination of things. So rather than just looking at the dome, I actually prefer to use Bookmap for momentum around my entries. So that's more helpful to me than just looking at the dome. Although I will look at the dome to see whether there are any large orders that might be a draw of liquidity. However, when it comes to price velocity, to me, looking at Bookmap is actually pretty helpful. Even though I'm a core supply and demand and profile trader, once the price arrives at my level, I want to see whether somebody else is thinking of the same thing that I'm thinking of. And then typically, if I am right, for a reversal trade, for example, you will see a very, very increased, kind of like a flurry of activity. And then suddenly you will have these orders that kind of shoot up or down in a vertical manner. That's very, very easy to see on Bookmap. So this is why I've started using it like for the last year or so. Just looking at the dome, to me, it's a bit too much. And, so I prefer to visualize things. Again, I'm a very visual person. So to figure out exactly how much momentum is there, I need a little bit more rather than just the dome. That's just me. But then again, I never worked in the open outcry pits. I was always an electronic screen trader. So having something that visualizes the auction around my level is more helpful, if that makes sense. And just seeing those pops in price, that's what sometimes will push me into a position, or sometimes I actually change my mind and I go, actually, I'm wrong, because there's like a load of opposite orders coming in. So I'm not going to go against that. So it's definitely like a more discretionary side to a part of my trading. But when it comes to levels, they are high probability levels for certain times of day. There's no doubt about it. So until the price arrives at my level, I'm not going to stare at Bookmap and just, make my eyes bleed. But once it's there, I like to see what's going on.
That's smart. Use the tools that you have available. A lot of suggestions, a lot of things that you might see that something you're not familiar with. And if that's something, ask questions about it, and hopefully we can answer those. Now, just coming off the chat here, we see this a lot. Up on the day, all right, up nicely on the day, and then ended up, let's just say, up 2,000 on the day, and you end the day down 700. What is something, D, that you share with your traders to ensure that you're not doing that? That's the worst thing that you can do, is have a real nice day, give it back and
Yeah.
more. And I mean, that's just a
I
setback, and we don't want that.
It is. Yeah. So I solve that with a number of trades per day. Now, in my methodology, the Mark Stoker's method, we typically aim for 2R multiples. So twice the amount of what you risked is your target. If you've not had any profitable trades in the day, you need to bail after the second full loss. So if you're down 2R on the day, you stop. If you're already up on the day, you have some budget. Again, if you lose 2 trades on the bounce, you're down for the day. If you're up, let's say 4R, on some days you might be right a lot, right? And you're like smashing it. You're reading the market really well. It happens to me fairly often where I get the market right in one direction and then I get it right in the other direction. So like one trade is like 2R, the other trade is maybe 1R. So I'm sitting at 3R. If I lose one trade or if I lose full 1R, I will walk away. Because it's like at that point, you're just risking everything that you've made. That's not what we're trying to do. So you already did your job, save the money. So I will allow myself 30 to 50% off the high mark, but I do have a point where I will keep trading. However, if you guys know how I trade, I very rarely take the full stop. So I will typically bail out of my trades before that happens. I don't advise new traders doing that because you still don't have enough like sort of proof of concept that whatever you're doing is correct. So messing with over management means that on a lot of the days you will actually over manage yourself out of a trade and then it goes to target. And now you're sitting at like 0.5R. So you only made like a fraction and you're staring at it doing exactly what you wanted it to do. So I try to force people not to overtrade. And the way also I do it, so we have the 2R multiples as a target. You shouldn't really do too many more trades that you're going to lose on the day that will vastly overshoot your target for one trade. Because if you do, it's going to be very hard to come back from that. So instead of pushing the envelope forward constantly, you're going to be like 1 step forward, 3 steps back, 1 step forward. So you have to be a little bit more mindful of that budgeting. People call it risk management, but I prefer to call it as budgeting because we're not necessarily managing risk, we're managing profits and try to hold on to profits. So that's why higher risk reward will always win over high accuracy.
Now, Dee, let me ask you, how do we know if we're over trading? How do we know that we're a 5 trade a day person? How do we know that we're a 50 trade a day person? How do we know that we're a sniper, one trade?
I think that many new traders will not be the type of people that do 20 trades a day and do really well. I think that comes with time, doing more trades and still coming out successful. And even then, it's extraordinarily difficult to keep doing that over and over. This is why only the very few people that you see are successful scalpers, because they know when to stop. They have that extraordinary discipline, which, let's face it, most people don't have. But, you know, there are a few individuals who are completely able to do a few trades, you know, do 20 trades in quick succession and then walk away. But even then, you will notice that a lot of those trades are part of a core idea. It's not going to be like 20 random trades. Let's go long, let's go short, let's go long. It's like, let's say 1 gold, and then you try one, and then you see it maybe dying off a little bit with momentum. Let's try again. But it's all the same of the core. It's all the same trade idea. Like, for example, I've got a long trade on in gold. One trade idea that I have that is that 2400 is going to stay. And I've probably done about 3 trades around this idea today, depending on what was going on in the markets. But that doesn't mean it's like, oh, it's a new trade. So from in my head, when I'm doing multiple trades around the same idea, that's not kind of going long, short, long, short. So here's one trick. If you start flipping and flopping, I'm going long. Oh no, now I'm going short. Oh no, I'm going to go long again. That's usually a terrible sign. So you need to stop, take a breath, go do something else. It means that you're not reading the market correctly. You're just literally just in the throes of price action and you have no idea, no plan, or you've lost the plot on the day. So at that point, you're like, okay. Anytime I start going long, then short, then long, I'm like, whoa, hold on. What's happening?
That's the chase.
And then I typically zoom out. I zoom out. So I stop looking at 2-minute and 5-minute in the book map. And I'm like, let's see what the next 30-minute candle does. That might give me a clue. And that's why I'm generally pretty good at bailing myself out on the day, even if my day didn't go well. As long as I didn't oversize it, I'm nowhere near my daily loss limit, I'm able to pull it back by the end of the day. So this is, you know, one thing that you kind of develop over time. But my first trigger in my head. Whenever I start flipping and flopping, I'm like, I have no idea what's going on here, so I need to stop. So I advise anyone who gets themselves into, it's kind of like, well, Anne-Marie calls it a kerfuffle. So that's a kerfuffle, right? You're like, long, short, long, short. Just take a breath, do something else, come back, zoom out, and come up with a plan, and then assault it again.
Right. I mean, the thing is, that's an effing kerfuffle when you got yourself in that position. But, think of it, and I know I've talked to Mick about this. Treat your account as your business and commit to that. Because if you do, revenge trading, emotions, they should be sitting wayside. They should be nowhere near the account. What you're looking to do is improve that account like a business. Now, the worst thing that I see is, 75% off going out of business sale. That was somebody's dream, right? That was somebody's dream to have a business, and it's failed. Same thing should be with your account. It's not a gamble. You're not just clicking the mouse, hoping customers come in. I mean, obviously you do that as a business, but for an account, you've really got to be thinking not what's going to make you feel better, but what's best for the account, right? No matter if you want to, man, I want to get in again. I want to get in again. And the thing is, it's probably best that you don't. It's probably best that you call it a day. You got a nice profit sitting there, no reason to risk it. And that's when greed kicks in. Oh gosh, the market's moving again. Let's get in. Sure, you put a profit.
It's because it's so easy.
Profit. It is.
But it's so easy. See, I do the opposite of, I say this all the time, I do kind of the opposite of most people, where if I've made money on the day, I will size down. But at the same time, the more time goes on in the day, the more probability that I start reading the market better. At least that's been my experience, because, with a profile, you get more data coming in. So you're like, okay, so that's happening now. But most people do the opposite. They start big, get themselves into a hole, then they size down. Well, that's never going to work, is it? From a numbers point of view, because unless you have a massive trade that you've already done, and then you can play around with that budget, what's going to happen is that you have one trade that maybe got to 1-to-1. A lot of people do that here. And then you size up the next trade. Well, if you lose a full one of those, you're going to be down -1. Like, why? So use the math. Use the math. It's like, it's our friend. Numbers on our side. That's what we want.
Friend. In this business, you got to make as many friends as possible, especially starting with the markets. Robert, how are you doing over there with those micros?
We're doing good. I pulled up the bookmap screen. It's technically not bookmap, to be clarified. This is Quant Tower's DOM surface. It's very, very similar to bookmap. Bookmap is first, bookmap is the king, but it's very, very similar, just because I had it up on the last session I was doing. It's exactly like you said. When things are bouncing all over the place, just get off of these little things, get off of the small pieces. Step back, look out a little bit. Even though you and I have different instruments and different styles of trading, everything you said I'm in 100% agreement with, because that's the philosophy of things. Just stop. Don't go in all the way. Try it out a little bit. Get things going your way. If you're up big, you don't have to give it all back. Just go half of it. Just preserve some. If you don't have any money to trade, you can't trade. So we're in the same agreement. I just wanted to show what this looked like when you're talking about these little bubbles of liquidity areas. It's just an interesting tool. It's just another tool. It's like a trend line. It's like a volume profile. It's like market profile, levels, TPOs. They're all different ways of looking at the same information. How do we want to see today's high? Well, you can pick your poison. What do you want to look at? Do you want to look at a DOM? Do you want to look at the bookmap with these bubble charts and DOM surface? Do you want to look at just the DOM itself? Do you want to look at a 5-minute chart and scroll out so you can see them all? Do you want to look at a daily chart and look at one candle at the top? It's all the same information. It's how you want to view it that's going to make the most sense to you for your style of trading. So I just wanted to make sure I shared that on there, and I'm going to put them right next to each other. We will shrink down the DOM surface and look at it so we can compare it right next to a 1-minute chart. That's the same information. That's a 1-minute chart for any
How are you reading that, Robert?
And the DOM surface on the right. I'm sorry, sir?
How are we reading this?
The DOM surface, well, they're the same price levels. So on the right, wow, okay, look at this. It looks like I have to renew. Let me just get rid of that screen for a
No,
moment.
don't renew it. Yeah. It's going to
I've got
open
Wow,
up
bookmarks.
that's
your.
interesting.
I can show something similar actually. So
Please switch to book map so we can see
yeah,
what you see on your oil. That'd be
yeah.
great. Thanks, Deeyana.
So I'm going to use gold for this. So
Change
up
screens.
here, I don't know whether we can change to my screen.
We get to that. We got that, Jack.
Yeah.
There it is.
So up
Beautiful.
here,
Thank you.
you have a whole bunch of stacked orders that represents liquidity, but also a supply zone. Why do we know it's a supply zone? Because sellers came in from there. So that's bookmap. And now if I switch to the regular 5-minute chart, well, where do we see sellers coming in? From this area here. So like Robert says, it's exactly the same type of information, just organized in a slightly different way. One thing that you can see in bookmap is the real-time bubbles, which represents the size of orders that are coming into the market. So not only do you get the resting orders that are there as a result of previous inventory that was located at certain levels of interest for institutional participants, those that can really move the market, you can also see the real-time price action and whether there's extra buyers or sellers, and also levels of interest. So here I can see that there's still some people interested in 2404 level. And then also way down, we have some orders also interested in picking up some stuff at 2402. We can also see that on regular charts, right? So it's literally the same thing. It's just what floats your boat. So I'm very comfortable with bookmap because I find it kind of an addition to what I can already see in the market via the supply and demand levels, because I've done supply and demand from the very beginning. So I started trading in 2007, but I didn't really start with supply and demand until 2008. So that's a long time to stare at these kind of levels of previous inventory. And this is why some of us are getting involved at areas of previous inventory. So it's exactly like a business. Somebody had interest here. So that's what we're looking for. We might sell through that. So we might sell when we get to that level. But it can also, like, depending on the context, this is where it gets a little bit complicated. But depending on the context, you as a trader have to decide whether this level is good for an actual sell or whether you're expecting the market participants to ignore this on the next run. And typically what supply and demand traders who didn't have access to bookmap used to do, we used to look at whether the level was tested before already. So the more times the level gets tested, the less orders are going to be sitting there until at some point they break through it. So if a level gets tested, that immediately weakens the level. And it's a very unique way of looking at things. So rather than being, oh my God, I need to go long or short, you just go, okay, this is where sellers came from. This is where buyers came from. So now we have that range to play with. And depending on how the market participants act around it, so we see that this level was already tested. This level was also already tested multiple times. So this could be a range day from now on until the market close. But one of these sides might actually give way. This is where you start going up in the chart. So rather than staring at just one little tiny time frame, zoom out, see where we are. And you can see that right now
Explain that a
demands are
little bit.
actually pretty strong. Zoom out, go to a higher time frame and look at the same thing. So where are the buyers? Where are the sellers? Also, did the sellers manage to keep the price away for long enough time, like several candles away from it? Well, right now, no, not on this 30-minute chart. I'm actually seeing some strength here, where every time we get there, not only do we not manage to keep the price away from the level, we're still pushing into it. That's bullish. That means, for my liking, I would be expecting this high to get broken because the buyers just keep stepping in. And there's one thing that my indicator didn't pick up here, but I can see it with my eyes. It's this demand in the middle of nowhere. If you see there's a bullish wick, buying buyers stepped in. So it didn't even spend any time there. It just touched it. So first area of demand that was touched, more buyers stepped in, and now we're pushing. So, that's, if you learn to analyze the markets in a more systematic way, you're going to see a lot of stuff that probably 90% of other retail traders who are just starting out, they can't see it. And it gives you an edge.
What market is that we're looking at?
It's just gold. It's the same trade that.
Okay.
Yeah.
Now, have you been trading gold over crude here lately, Deanna?
Yeah. Yeah. I mean, look at crude today. It's like we're doing all of this stuff in the Middle East, and crude oil is like, I'm just going to do 100 ticks today. It's like, what? So
It's
gold
I
is
tell
like
you though,
300. Where are we?
a lot of weight.
352 ticks gold has come up today. And however you spin it, a market that is only 100 ticks wide with like candles on a 30-minute chart that are 3/4 of that range. Like if you look at crude oil, one 30-minute candle is like nearly 70 ticks. What kind of follow through can you expect there? You can't. But
Right.
anything that moves more, there's more opportunity. It means it gives you flexibility to get into those larger chunks of the move on the day. It's always easier to trade markets that have more momentum. That's why I'm staying away from crude oil. I'm looking forward to our Bob coming into Topstep, so I'm eagerly awaiting for that. I'm glad the platinum is there now, so very, very happy. So yeah, if we could
Yeah.
just get gasoline
All in the
futures
works.
in there, I'm just going to be one happy buddy. I don't need anything else.
That's it. I am done. I am happy.
I'm done.
Leave
I'm
me
happy.
alone.
Yeah. Yeah.
Well, the thing is, a lot of people asking, there's always things that we're going to be adding here in Top Step X. We will let you know when we do add those, but I really appreciate the suggestions from our traders, and the vote up and so forth. How many places? Uh, I don't know of any, and being in the business here for a long time, where company was developing a product and as they were developing it, they asked the customer, what would you like? What would you like? It's far
Especially
and
in the
few,
trading platform world. Like you
right?
have
It's
so many
take what we
trading
got,
platforms that are like, yeah. And the fact I was actually talking about this on my live stream. They're like, oh, why doesn't TopstepX have this? Oh, TopstepX should have ATM orders from Ninja Trader. Blah, blah, blah. And I'm like, yes, it's gonna come. Like you have to keep in mind that platforms of this sort usually take years to develop. And here you have MP with Casey and their development team. They've done something extraordinary in the space of like, what, 9 months? So just be patient. It's
right?
coming.
Well,
It's
I
already
tell you,
good.
they were beating the
Yeah.
drums and cracking the whip, and
Yeah.
actually, the team that helped us put that together, top notch. I don't think we could have found a better team.
Yeah.
Um, of
It's very
developers.
trader centric. That's what's so unique about this. It's trader
Right,
centric. Not like, oh, I'm a broker, I want to have a platform. No, it's like we're traders. This is what we want. Nobody's done that yet. So from that
right,
perspective, this is something that we've never seen in the industry ever. We have platforms that have been made in like the 90s, even the 80s in some cases, and they look it. They are outdated, they're dinosaur. So it's time that, somebody stepped up and said, "Hey, there's so many traders now. Let's make something that we can use." And it's very innovative, very disruptive. So it's so good to see that they're just pushing these features at a lightning fast speed. It's amazing.
right. We want to make sure that our traders have what they need at some point. Robert, how you doing over there in your trade, old boy?
We're doing all right. It's just hanging around the overnight high as we see around
We
17,904, 905. Just sticking
We
around
need
there
something
right
for you
now.
here.
I
Somebody go prod
know.
Jay. Where's Paul? Paul was done pretty quick here. Not really too much to upset these markets. And taking a look right now here, a little while ago, Brent crude futures settled 90.02. That was down 8 cents. TI settling at 85.36. A barrel of beer down 5 cents at 0.06%. We're seeing that, but market's still trading. Looks like we got the buyers back in the market here for the ES and the NASDAQ.
Yeah.
See how
Yep.
far they can make the run here. Now, if you look
A little bit.
right now, I don't got my charts up, but I think we need to break out of this. If you look there, I got my 15-minute candlesticks up here. Looks a lot trading from west to east, nothing really north and south. And I think if we can bust out of this, we might see another top. Now, we did see that spike to establish the new highs in the ES and Nasdaq. But once again, that was a market. I don't want to call it a fluke, but obviously the market didn't want to stay there too long. So we are seeing the buyers come in. I think if we pop this top here, we might see some new highs. But Dee, what's your take on here on the gold here?
Gold, I mean, obviously we're post settlement, but it's still moving. I reckon there's still a little bit of strength in this market. I want to see it pop the top into the close. So it's been happening a lot, especially on these risk-off news. That's what I'm going to be waiting. But having said that, we don't have risk-off sentiment. I just took a look at NASDAQ. I mean, we do have some areas, a gap close. And that was, I think, the failed attempt the first time around.
Right.
But I think there's still room for a gap close in NASDAQ in particular. So there's room until 180.48.5. And if we start seeing strength that holds into that level, I wouldn't be surprised to see a very quick run up through that. Having said that, the moment we have a neutral day, it looks like a bit of a slow day after a massive move yesterday. So sometimes those aftermath days can just end up as a big, as John says, nothing burger, like storm in a teacup. Lots of spikes everywhere, but ultimately it doesn't move the price to any new levels. But if we do get a sustained move into it, we might see the gap close into power hour. So be careful of that. Don't fight it if it comes.
I think we are distancing ourselves from that west to east market. Besides, we took the jump to the top, but we'll see what happens here. It looks like buyers might be just a wee bit stronger here. We'll see how long that lasts for the ES and the Nasdaq. Also, crude putting on some buyers here right now. Gold sort of rolling over and getting a belly scratch here, like a good little puppy. Yeah. But we'll see if anything can happen in gold right now. But Robert, before we go, any closing comments here? I know we got about another couple minutes.
Yeah, there's something that I've heard peppered throughout this conversation that I'd really like to address, and that is to be adaptive and be malleable and be fluid in your trading and not so rigid, because the markets are changing. Even if you pick the same market, same strategy, same time. Look at today. We have the NQ. We barely broke over 100 points. Yesterday it was 500. So if you just get stuck in one thing, I'm only taking this trade, I'm only doing this, if the market's not doing that, you just got to adapt. You just have to be a little more malleable for it, a little more moldable, I guess you could call it, right? So it's like, hey, I want to take the highs, and if it's going up 50 points, I'm going to short it. Well, what if it goes up 30? Like, you have to be able to adapt, and that's just a big thing that I think. It's like, instead of being so strict and rigid. For example, if your stops too, it's like, I'm only using a 20-point stop. Well, if it's only moving 5 points, it's not going to help you, right? So I just want to make sure we put that out there too for everybody that's new to traders. Just be careful.
It is adapt or die. Dee, any closing comments?
Yeah, I mean, stay flexible. One tool that I found extremely helpful in staying flexible is the profile. If I didn't have the profile, I wouldn't be able to spot some single prints that get left behind. And that allows me to sometimes modify my plan on the fly. Obviously, don't do that if you're super new and you're still trying to, find the probabilities of the strategy that you're trying to use. But it's a good starting point to not ignore events that are happening on the profile. Like for example, gold has built quite a lot of structure today. It's one hell of a range, and we've built structure. So that might mean that this is it for the day. But having said that, I'm keep seeing these buyers coming in. So if I, at any one point, see the market jump over the high, sustain the high, create single prints to the upside, I'm going to open up my target. I'm not just going to stay with 1.52R. I'm going to open up my target, and then I'm going to track what the price action is doing in real time and whether those single prints are being left behind. That by far was something that Hoagland taught me pretty early, sort of 8-9 years ago now. But it's been invaluable just to stay objective, even when you have a trade on.
There you go. All right, Deeyana, thank you very much for being with us here We will
Thanks,
see
Eddie.
you later. And of course, Robert, thank you very much. Before we leave, this coming over the wire here, Israel reportedly finalizes plans for a counterstrike against Iran. The Israeli military is said to have finalized a strategy for the response to the weekend attack by Iranian forces. And this is coming from Familiar Matters from the Jerusalem Post today. So let's keep our fingers crossed nothing of that does happen. But otherwise, coming up here next, yes, it is Power Hour. We got the dynamic duo. Well, actually, Dolby time. We're going to have Hogan Andre. All right. So Hogan's going to jump in there. And Austin's going to join us again here. Great to see Austin. We're going to take a break. We'll be back with Power Hour. Don't go away. You're going to love it.